Welcome to my trading room. And right now we will be going to the model 10, the final part of this course. So we divided into two parts, part one and part two. So in the part one, I'll be taking you to theories. Then part two, I'll be making analysis on 10 charts, top 10 charts. We'll be making analysis on. So for now, I'll be going straight. So before we end this course, um, we have to write out at least three keynotes, three key points that can make your trading life better. Write out three trading points for each model. Write it out. That's for your personal use. You can decide not to do it. But for your own benefit, it's better that you note out important points for each model if you've not been doing that before now. And also, you cannot apply all the strategies in one chart, or you cannot use all the strategies for your trading. So you can only work with something that is convenient for you and something that you can identify easily. For some of you, you can be good at using fair value gaps. Some of you can be good at using order blocks. Some of you can be good at using OTA. Some of you understand support and resistance very well. Whatever you understand, whatever you know that you can always do over and over again without getting tired, and you can easily identify, that is your strategy. Now, I won't say much on that. I'm going to be moving. So I got to move. So where do we start? So now this is model 10 and we are starting. So first I will take you steps to place a trade, creating your trading plan, managing your risks and maximizing profit. This is what we'll be talking on in this model. So now you have to now this is just like putting it all together. What you'll learn. Just like combining everything, putting it in a single piece and tying it together, you understand? That is what I want to explain here. There are always key things you watch out for. Most of you don't even really know what to do. For some that are still newbies, when you open your MT5 or your MT4 or your C trader or your whatever kind of market you're using, your trading view app, the first thing to do is what I'll be taking you through now. Now, I wrote there are key things to take note of, and there are steps to be taken before entering a trade. I will highlight this point. Now, the first thing you do is that you want to know the bias. Assuming this is my chart, I have not done anything here. Assuming I've not done anything here, and I want to know, okay, where is my bias? What will I really do? Okay, that's what I want to know. I won't start from the 1 hour time frame to make my analysis. Yeah. Now, for a better view, I would like to go to my weekly time frame for analysis. Then can go to my weekly. Now, when it comes to analysis is something you do with patience and discipline. You don't just rush your analysis. Let me know what it's saying so that I can. You do your analysis before you enter the market. You can do your analysis in the night. After doing your analysis in the night, you can draw out. After doing your analysis in the night, you can now draw out your key support and resistance zones that you want to look out for. You can now draw your key areas. That's what you do. So first, you need a bias to have a clear view of price direction, which comes in three forms: bullish trend, bearish trend, and ranging market. So you go to your higher time frames, like the weekly to down to the daily and 4 hours time frame. Those are the three time frames I really recommend when you want to know your bias. I'm not doing any practical, so I think I'm getting all these charts now. I'm not doing any practical. So you want to know You want to have clear view of the price direction, so you go to your weekly. Like you have to refer back to the model 4 or 5 where I talked about time frames. You understand? That is very important. Now in time frames, you understand how to and where to start making your analysis from. You don't just start making analysis from any time frame. So that is going to explain better where how you make your time. So first thing you do, you have a bias to know the direction of the trend. Then the second thing to do is that you need zones. You need to understand in the zone. You need to understand the now price could be bullish, but it doesn't mean that it is in a bullish trend. You understand? Price could be bullish, but it doesn't mean that the market is currently trending bullish. Price could be bearish for a moment. It doesn't mean that it's always going to be bearish. That's how it is. So now you have to identify your zones. You have to identify your zones. Like what I said about zones, I've mentioned it earlier. So if you've been following the course, you should understand zones. Now the next thing you look out for is that after marking out your zones, knowing your bias, you first know the bias or the zones, then you mark out your zones and know the key levels in the charts. Now you want to know the key levels where you'll be watching out for reversals. The key levels where you'll be watching out for reversals. That's what you want to know. So now in the current place where price is, or in your zones, in these zones you have marked out, you have drawn out. You first of all you draw your zones in the higher time frames, and you watch out for when price will reach those zones you draw out in your higher time frames, like 4 hours and 1 hour mostly. That is where you really watch out for. So if it reaches there, what you'll be looking for are reversal signals at that point before you will now think of entry with the lower time frame. So the next thing you're looking out for is risk management. You have to define your risks. Now, to understand risk management broadly, you have to refer to my course, a risk management course. I talked about risk management in a very broad theme. So you understand every single thing about risk management. I'm not going to present it here because it's something that is very broad and I cannot start talking about it. But you have to define your risks. You have to know what you're willing to lose. If I want to lose $50, there are certain positions I may not attempt to enter. And if I'm attempting to enter, it means that I'll reduce my lot sizes. But if I reduce my lot sizes till it fits in the $50 I'm about to lose. So that's it for risk management. Then lower time frames for entry. Now it's very important that after drawing out your bias, drawing out your zone, after knowing your bias, drawing out the key zones, watching knowing where price will reverse at, then the next thing is that you want to go back to the lower time frame to make your entry. So if you are in a bearish trend, you're going to be finding a bearish setup in a lower time frame so you can enter. That is it. Now take a break after a loss or a win. Don't enter again. Some people say take a break after a loss. No, if you take a break after a loss, you're still good, it's okay. But take a break after a win, because most losses come after a win. So if you win, take a break, come back later and trade. Now the next thing is creating your trading plan. Now, what is the basics of creating a trading plan? Honesty. I'm very sure a lot of people were expecting me to say a lot of things about um charts. No, when it comes to trading plan, I think you really need to be honest, because a lot of us are not really honest about this. Now, honesty is paramount. Now, honesty, what do you really know and what can you do? You know that you're new to trading, you're just coming into the industry. There are certain risks you definitely should not take. Be honest to yourself, tell yourself the truth. There are certain risks you shouldn't take, and there are certain things you shouldn't be doing. That is the first thing you should know about creating a trading plan. Create a very realistic trading plan And before you can create a realistic trading plan, you have to be honest to yourself about what you know and what you don't know. You're just coming into the industry. You shouldn't be taking any risks. You get, you shouldn't be taking any risks. You shouldn't be risking anything. You're just coming into the industry. What you're doing now is that what every fund you're depositing in a real account is what you're is still an experimental stage for you. So even your real funds, no matter how much, how many years or how many months you trade a demo account, your first deposit is always still an experimental account. You understand? You're still experimenting with that live account, so you cannot take risks. Even if it's a $1,000 you're depositing, it's always better you use the minimum lowest lot size as possible. I can even say you should use, even if it's for a $1K account, I would even prefer you use 0.05 or you use 0.02, because at that point you are doing experiment on things that can work for you. Understand? So as much as you're doing things that can work for you, it's not good that you start losing money. It's when you are setting and rest assured that what I'm doing can be profitable. That is why you can think of taking some kind of risks. Now, availability. How often do you wish to stay on screen? Some people they like checking their screen once in a week. Some people like checking it every day. Some people like checking it in a very specific time. So understand your schedule. Some of you are combining your personal jobs with trading. So if you're combining your personal job with trading, how often do your work give you time to check the screen? Those are things you look in place before creating a trading plan. Now, what is your desired pattern of trading? Are you an aggressive trader that loves taking large risks? You're willing to lose your whole account just for one single trade. Are you a conservative trader that prefer to manage your funds properly before you lose? Then are you a mixed trader, aggressive sometimes, conservative sometimes? So you have to know the kind of pattern of trading you like. So if you're someone that is aggressive, you're an aggressive trader, you have to work on having sniper entries. Same thing with the conservative trader, but your own, there's more emphasis on an aggressive trader to have a sniper entries, because if it is not sniping, it's going to suffer losses on losses. Now, what kind of market interests you? Like, do you like a volatile market like gold, US 30 index? You know, they are very volatile market. Or do you like something that moves slowly, like the card pace? Or do you like USD pace? You understand? So, what kind of market interests you? If you're interested in how if you're interested in the volatility of things like gold and index, then that should be your major currency pairs. That should be your major concentration on pairs that has strong volatility. If you're someone that you don't like the market to be volatile, you like something very slow and steady, so you should go for card pairs or USD pairs, because I think from my own experience, I think USD pairs are their movement is considerable and considerate. They move at a very normal pace. Then, can you handle loss? How much are you willing to lose? This is very important. Like, now, when it comes to here, I do say that you must be able to handle loss. You must be able to handle loss. So if you tell me you don't want to make a loss, then I'll say you should quit trading, because there's no guarantee anywhere that you will not make a loss. And if there's anybody telling you that you won't make a loss, you should run more. The reason why you should run more is because the person don't even understand the concept. Now, when it comes to this stage, what really matters is how you handle it. But that's what really matters. That is why your risk management is important. Your risk management is important. If you're so confident in yourself that, okay, if I have $100, if I if I take 5 trades out of the $100, the probability of me, even if it's out of the 5 trade, even if it is one that enter, I'll cover the 4 losses uh, I made. That will give you the confidence to comfortably lose $20 inside the $100 we trade, because you know that in these 5 trades I will take, one definitely will cover all my loss. That is what I'm trying to say here. So how can you handle loss? So if you know that you cannot handle such kind of scenarios, you better quit, because Trading is not something that is straight, but you have to be able to manage your loss. The probability of you winning should be high. That is why you should be following a pattern. The probability of you winning should be high. You should learn to don't risk more than what you can afford. You understand? So if I'm having $100, I cannot go full margin for the $100. I cannot even go half. So if for me, I'll break it down. I'll break it to, I'll break my funds into like five. So except I take 5 or 6 trades, except I lose 5 trades or 5 trades, my account will still be intact. That is it. Now, what is your favorite form of trading? Are you day trading? Are you swing trading? Are you someone that likes scalping? You understand? Are you someone that like you like day trading? You like coming in and going out in? You understand? So you need to understand these things before going to the best part of creating a trading plan. Now, price action or signals, which do you prefer? Price action, some people want to study and know for themselves. So if you're that kind of person, you know that you definitely have to be working so much on yourself. And if you're someone that prefers signals, you should always know that you should always be on your signal channel frequently so that you won't miss a signal. Now the next thing is write your plan based on the questions you have answered. Understand? So now if you have a private class with me, I will really elaborate the trading plan to you so you know how to create a trading plan. I think this part of it requires so much attention, so much personal attention because you cannot you cannot you cannot use what you use for A for B. You cannot use what you use for B for C. It's different. People differs. You understand? So I cannot give a general verdict on that. So some people can work with fair value gap. So when you want to create your trading plan based on fair value gap is something different. Now, trading plan is going to help you understand the market the more. You understand? When you start creating a trading plan, it's just as if you're going into research. You start observing, you start taking note of different things you never did. So from the research you're doing and from taking notes and doing things like that, you discover that you keep getting better on what you decide to do. Understand? That is how you go about it. Now, how do you manage risks and how do you now risk management is the guiding principle on what you want to lose without being attached to it. Now let's take a pause. If I have a $10,000, if I lose a $200 in the $10,000, I won't feel it. Now, because I won't feel $200, I won't feel $300, I can comfortably take a loss on it. But it doesn't mean I should be careless and be taking to $200 loss every time. No. But I'm careful while doing my analysis and I'm placing my trades carefully. But with that knowledge, I'm still risking what I can afford to lose. So that at the end of the day, if price went against me, I won't be moody, I won't start forming emotional or negative emotions. Understand? That is what risk entail. So you have to be able to detach from your trade. It is hard. It is not an easy thing to do. Risk management is not as easy as you think. Uh, some people might say, is it not just to reduce your lot size? Don't worry, when you get on a live chat, you'll see that it's beyond that. It looks as if it's another force that is controlling your hands to play streets. So now they're always attached to either a losses or profit at the end of this. So the first concept is that what can I lose without losing my account? So if I can lose $200 without losing my mind and my account, I will take it. If I can lose $500 without losing my mind and my account, I will take it. So you need to define your risk level. Now the next concept is to understand how you manage your profit. A very important underrated point. Your profit can open door to many losses you never wished for. Have you come in a scenarios where you made a huge profit and the next moment you're making a more huge loss? That is it. So you have to understand how you manage your profit. That's why I said that immediately after your loss or your profit, quit the screen for some times. The next thing you'll be doing is you'll be doing a I want to do few analysis. I want to do few analysis as the part two for the model 10. So you just stick on. I'll do analysis and I'll show you how I started. It's gonna be a live chat. I'm not using any pre-recorded chat. I don't have that. I want to show you so how I do it. So I'll be making analysis on major pairs like US30, GBP USD. I won't be doing any analysis on Euro USD because Euro USD and GBP USD are most the same. So I'll just choose two USD pairs, probably just the GBP USD and the maybe the USD JPY or whatever. I'll just choose different currency pairs that are not similar. I'll choose different currency pairs that are not similar. I'll make analysis on it, and that will be our last model. So from that analysis, you can understand how you can start making your analysis on the chart and arrive at a very good bias or position. The truth about taking signal is that taking signals is good, but the truth is that how fast are you to execute it? How fast are you to execute it? Because if you don't execute a signal on time and it goes against you, what are you going to do? And secondly, the person, when they are sending the signal, they are not telling you the amount of and they are not sending you the signal with the amount of money the loss will carry and the lot size they are opening. They are not giving you those details that will help you um manage your risks. A lot of things about signals I don't like. That's why I don't give signals. I prefer making my analysis online or in a group. So if I make an analysis as someone that is trading, after making the analysis, you should be able to understand where you should enter from and place a price. So if you don't even know trading at all and you want to start by taking signals, I'm not gonna do that for you because you're just planting failure for yourself. That's the truth. So if you don't know anything about trading, then you shouldn't even be taking signals from anybody. Because I still advise people that even if someone gives you a signal, the first thing you do is that you analyze the signal, you analyze everything about the signal and check if you can enter or not. After making your analysis doesn't take too much, so don't think as if it's a big deal. Analysis, if anything that makes analysis a big deal, like if an analysis is complicated, you enter the chart and you're not seeing anything good, they start forcing price, you start forcing your analysis on the chart, it becomes wrong. You understand? That action is wrong and it can make a lot of things go wrong. You understand? So analysis is very simple. Someone give you a signal, say sell GBP USD. What are you going to do? Okay, let me go to my chart and see why should I sell the GBP? You make your analysis, check your things, do whatever you do, and say, okay, the signal is not accurate. I'm not going to trade it. The signal is accurate. I'll trade it. You understand? People have different views on the chart. Like in module 3 or 4, I opened Forex Factory where I show you that the different positions people are taking. 50% were buying Euro USD, 50% were selling USD. So people have different views of the market. You understand? So that is why whenever you're giving a signal, it's good that you look at the chart yourself at least. That's why you should always know how to trade, at least know how to do the basics analysis. Your eyes might not be on all the currency pairs at a time. You understand? You're not a god. Your eyes cannot be on all the currency pairs at a time. But if someone sent you and say, okay, USD JPY will be buying soon. If you're someone that trade currency pair, I don't trade currency pair, I trade index. I trade US 30 basically. I'm a Wall Street guy. I trade just US 30 and it gives me position the way I like. It gives me enough entries the way I want. So if you're someone that trade currency pair, someone said, okay, USD JPY will be buying. What will you do first? You check the USD JPY. You literally be buying. You make a short analysis and you know when to enter and when to exit. That will help you better. But if you don't know anything about trading, anything they send to you, you will just be triggered and triggered. You don't even know risk management. You understand? Risk management is the key. Some of you, if you take three losses, your account will be gone. So those are the things you really consider. So please, for all the newbies, before you start taking signal, know a lot of things. Know the basics of trading. You understand? Know the basics of trading. And I want to advise you to rely fully on signals. Rely fully on signals. Try to develop yourself. Try to develop yourself. Try to test new strategies. Dedicate as at the beginning of your trading career, dedicate enough time for research and back testing. You understand? Try to know what is working and watch a lot of videos, different, like now I talked about a free value gap, and you're interested about free value gap. You won't just take my ideas alone. You go to other, what you do is that you go to other traders channels. You understand? When you go to other traders channel, you also check out what they are saying about the fair value gap. When you do this thing, you're gathering knowledge. You're gathering knowledge on how to talk. No two authors saying this talking on the same topic says the same thing. You understand? No two authors talking on the same topic says the same thing. It doesn't mean that they are not good. They are all good, but they understand from a different aspect. So now you that is new to the trading life, you have to listen to different authors so that you can balance yourself. You understand? You have to listen to different authors so you can balance yourself. So by the time you pick out key points, you say, okay, this one said this in fair value gap, but it's not, this guy did not say it. Let me take note of that one. Let me write it down so that I will implement it. By the time you gather the knowledge, you become an expert on fair value gaps and the rest of the others. That's how you develop yourself. Understand? So if you want to do mitigation block, you want to do breaker block, you want to do OT, you want to do whatever. Understand? You go to different authors, you understand what they are saying about it, then you implement it. And don't be scared to pay for mentorship from people that have your time. I have your time fully. Understand? Once you pay the money to me, I have your time fully. There's nothing like um there's nothing like skip classes. I don't do that. You understand? Now, why is mentorship important? Mentorship is important because there are a lot of things that you might come across that is not going to be so, that I may not talk about in this video. You understand? And the reason for mentorship also is that there are some things that have not been explained, and it opens your mind to a new world of trading. Imagine trading on the same table with a professional like me. You're trading with me, you're seeing the chart, you're seeing the way I'm doing analysis, you're seeing the way I'm placing my trade. How do you feel like? Understand? So those things are what boost your confidence and give you a sense of, okay, yes, I'm really on track. Understand? So even if you make a mistake, someone is always there to guide you. Someone is always there ready to listen to you till you're free, until you can do it. A lot of tasks are available for you to take. A lot of things are there for you. So you have to keep you have to sacrifice money. There is nothing that works without money. Understand? So if I tell you that, okay, you can learn trading without spending money, I think I'm lying to you. I can't tell you that. Even if you don't pay the money to me, you always pay it to the market, and the market will collect you a very huge sum before you now learn. So what do? You hire a mentor. You pay a mentor, someone that have gone ahead of you. You understand? I was saying of recent. I said George Soros. Is it George Soros or Michael Soros? I was asking. He was the one that broke the Bank of England. I was saying to myself, the people around him, why didn't they pay him? Why didn't they force him, or why didn't they pressurize him to teach them how to trade so that they can also make same feats? You know, this entitlement mentality of believing that because someone knows something, he should be able to teach it for free is wrong. Now, for every value you're giving, make sure you get a pay. From everything you feel that has value, make sure you give value to it. If you don't give value to something, you might not value it. That's the truth. Understand? These are things you apply in general way of life. You understand? You apply it in general for everything of value, pay a price. Now, I wish I was close to George Soros. I don't mind paying him any amount he asks for, just for him to teach me how he broke the Bank of England. That will make me better. So if you see any good trader around you that knows how to trade very well, if he's telling you, okay, I'm going to charge you for doing this thing, trading is stressful. Trading is stressful, psychological stressful. Imagine answering crazy questions over and over again. It hurts. Understand? So if people cannot take that time, people cannot waste that time to do it for free. Nobody is a slave, guys. Nobody is a slave. So for everything of value, you give it value. For everything of value, you give it value. So those are ways you develop yourself. I said first thing, you learn from different people. I don't mean you should pay mentorship to different people, because if you pay mentorship to different people, you'll be at loss because everybody have different concepts. So imagine learning 10 concepts, you will not be able to implement any. Understand? So just find a mentor that has your time. So I said first thing, learn from different people through YouTube or through whatever media or through books. So if you want free value gap, you learn free value gap from different people. Now the second thing I say you should get a mentor that can work with you personally. Understand? That can work with you personally. That is why my trading course is a personal course. It's not something that is crowded. I know why I choose it that way. I choose it that way because I understand the trading game. The trading game is not something that people should be filled with. That is it. It's something that you give personal attention to people. So that's just it. And that's just it for now. So have a nice day. Like, share, comment. My trading course is always available, but it's not available at your own will. When my when the sessions are open, I'll always I'll always send a prompt to the group channel. So if you have not joined the group, do well to join the group, because if I'm available for private mentorship, that is where I'll communicate it through. I'm not always available every time, but once I'm available and you once you transfer or once you pay me for any class, make sure that I give you the value for your money. And the value for your money is that you will know how to trade. Thank you. Have a nice day.